Hello, fellow Rebel capitalists. Hope you are well. We've got the weekly wrap up. What a big week, in fact. We had the CPI come out, initial jobless claims, which has me thinking, let's say, and it had me actually change up my portfolio quite substantially. So let's go to the calendar first and foremost. I want to switch up the screen share. Here we go. So we had Empire State Manufacturing swing and a miss. Forecast was 4.5. We had a negative 8.7. And then we go over to retail sales. It's like hot and cold, hot and cold, hot and cold. It's like Goldilocks. It's not like perfect, but there's a combination of everything to where if you want to come to the conclusion that it's a Goldilocks economy, you've got the data to support that if you want to ignore 90% of the negative, or if you want to ignore the labor market, let's say. So you look at retail sales, 0.6, 0.3 expected. Okay, we go down here, and then we get to builders, home builders confidence. Whoo, wow. That was a big story of the week because we go over to this Zero Hedge article. Let me zoom in. There we go. So title, U.S. housing starts and building permits plunged in August. No kidding. And look at the red, 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 red. A lot more red than green. And more recently, the private total housing authorized by building permits. Boom, red, 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 red. So this begs the question, okay, if all this is red and if we have the home builders that are building a lot fewer homes than they were even a year ago, and by the way, that was just the month over month data is really a red flag, let alone the year over year data. How long do you have construction jobs staying where they are? So I went over this on a video yesterday. But if we look at the construction jobs, this is a great leading indicator in and of itself. And with the exception of .com more recently, and it did go down, but it wasn't really a leading indicator there. It was kind of going down as we were in a recession. But you look at 1990s and it was a leading indicator. You look at GFC definitely. And then Cerveza, not really, because that kind of hit you from out of the blue due to the government's response to the cerveza sickness. But you see this flatlining here. But okay, great. If we have building permits plummeting, how many construction jobs do we need? The answer is fewer. And so if we see this going down, I think that's going to, that in and of itself, I don't think causes a recession. But when you have that combined with everything else, as far as the, and by the way, this is one of the things that's been propping up the labor market. So once you take away that pillar, you could have kind of the Jenga puzzle. And I don't know how the construction jobs stay levitated as the building permits fall off a cliff. At a certain point, you would assume that these construction jobs have to go in the same way, or the building permits have to pick back up. And that's definitely not my base case. So that's one of the reasons why I wanted to really focus on the housing market and these housing starts. Now, the prices in nominal terms for a lot of the United States, they're still going up for sure. Maybe not so much in real terms. And at the end of the day, I think that is what's most important. But there are pockets of distress. I mean, we hear about Florida all the time. And I remember that when I was in Cape Coral, this was 2021, I was there for maybe 3 or 4 months. And there's not a lot of property. So it's not like there's just massive amounts of supply that are coming online, because you have these little, if any of you have been to Cape Coral, you know how it's set up. It's like these little, what you'd call them, kind of island things, and everyone is on the water. It's almost like that Palm thing in Dubai, but like a super white trash, like blue collar. not to say that I don't like Cape Coral. I like it, but it's it ain't the Palm in Dubai, that's for sure. Let's just say a blue collar Palm in Dubai. But my point is, there's not a lot of room for a lot of supply coming online. So that's a demand side phenomenon that you're seeing with the prices just right off a cliff. And it makes a lot of sense because demand goes down, but then supply increases at the same time. Why? Because people are having a hard time, not just making their mortgage payment, because you might have a fixed rate there, but they're having a hard time with the insurance, hard time with the taxes, hard time with the maintenance. All those costs are going up. Their paychecks aren't going up at the same rate. And what's the difference between your mortgage payment going up by $500 a month and your insurance going up by $500 a month? There is no difference. So that puts people in a very compromising position, especially with Cape Coral. You had a lot of Airbnbs out there. I remember I actually rented an Airbnb when I was there. Great place, by the way. And it's like I don't know how many were on my street, but just on my street alone, there were a lot of Airbnbs. So you kind of could see that one coming. So that's why I think what we saw in the home builders, and also, if you look at Lennar as an example, I was reading kind of some of the statements that they made. They might, yeah, here, Lennar anticipates Q4 home deliveries of 22,000, averaging 380, with gross margin near 18, missing analyst expectations. Why is their gross margin so low? Because they're having to give all of these incentives, which are just basically lowering the price. They don't lower the headline price, but they give you this incentive that they buy down the interest rate or something like that. That's effectively doing the exact same thing as lowering the price. But what's interesting, if they don't do that, then it doesn't impact comps, right? So if they just give you a $50,000 credit for something, they do that as opposed to bringing the price from 380 down to 330. Well, it's the same thing, but the comps didn't go from 380 down to 330. So it's a little bit of like financial engineering, but they're having to do that to such a degree that it's impacting the margins. And I read this is what they're complaining about. But what they say is, oh well, this isn't going to be a factor in the future because the Fed's going to drop rates. And you guys know the fallacy there from watching my videos. The fallacy, of course, is